Hello and welcome to another update video about Rune. The situation on the Rune chart is still quite bullish. The chart has so far not given us any significant bearish signals. The price reached one of our targets that we had on the chart, perfectly reacted to the $6.38 level, which is the 1.38 Fibonacci extension, a key level for such a wave 3. Ideally, however, we would like to see the $8.20 level in this wave 3 to be triggered, but we'll see. I have a couple of possibilities here on the chart. The blue wave count is new, both bullish, only below our main support at $3.14, which is unchanged from the last video. We have to assume that the price topped in the white ABC structure, which is entirely possible. Nothing I'm primarily watching for until we see a confirmation with a break below $3.14. So, I mean, the support area has to be adjusted with the price, right? But the wave count in yellow is unchanged. Whenever I made changes to support, I communicated that to our gold members. As a member, you also have access to our TradingView live charts, and you can see any changes. But as you know, the support area for a wave 4, this upcoming pullback, which might have started, we'll see. This always has to be adjusted with the price, okay? So it is calculated based on the length of the third wave. So it's entirely possible that obviously this was a wave 1, that's the assumption anyway. This was a wave 2, the pullback that happened in October, and we started the third wave. We now get into the regions where the third wave can top at any time, because the 1.38 is an acceptable target for a third wave. It would be a very weak third wave though in an impulse. Ideally in an impulse we'd like to see the 1.618 extension reached, but 1.38 is acceptable. So, we need to be prepared that this could be the wave 4 pullback. That's not bearish, that just might allow for anybody who's been waiting for Rune to take a breather to find an entry in this support area. That's one scenario, but below $3.14, I have nothing clearly bullish. It can still be bullish afterwards, but it will be less clear, and the risk to trade on the long side will increase below $3.14 because the chart will lose its impulsive potential. It can then still form a diagonal, but these are less predictable. So then we have the blue wave count, which is new. It's just it's basically yellow, just with a different subdivision, and allows for the wave 3 here, to escalate higher, possibly to $10 and beyond, $12 and beyond. In this wave count, I have a 1-2 setup here, which bottomed in early November. And then we're basically here in circle wave 3 of the larger degree third wave. So it's just bullish escalation count. But to keep this scenario alive, it needs to hold $4.60. So that count is new. I've added it because a lot of you asked me for a micro count. And in the micro count, either the yellow wave 3 is done, or we can still find a move higher, we can still allow for a more direct escalation higher, as long as the smaller micro support level holds here at $4.60. So that means below $4.60, if we get a sustained break below that level, that would imply and include a break below the trend line, and it could lead to a bit of a head and shoulders pattern. Can you actually see that? Left shoulder, head, right shoulder, then it might take us down into the orange support area, which then might provide a nice entry point. At the moment, there is no signal that the price is bottomed, but I think it is recommended to watch this area at least. Watch this area, a break below the trend line, you could argue, would reduce the probabilities for the blue count, but it really is the 50% retracement level. Ideally, it doesn't even break below $5 because that's a 38.2 Fib level, ideal target for a fourth wave. But because it's been so much it's not even overextended to the upside, but it's overbought, right? It was overbought on several time frames. So bearish divergence here on the chart as well. It's now entering the bearish range. So it could, on the 4 hour, it could indicate that we are now in the larger yellow wave 4. But on the daily chart, they're still very, very much in the bullish range. So nothing really bearish here until we break below $3.14. So one possible strategy would be to maybe start to scale in very slowly, with like a triangle that I always show, calculating your position size against the $3.14 level, because only below $3.14 we know it's really bearish. and these support areas overlap really, okay? So that's one possibility. The other possibility is to use that moving average strategy that I discussed in one of our member live streams and also indicated, I think it was the last or 2 videos ago. Yeah, we talked about that moving average strategy as well, which I think we talked about it when we were here. Yeah, and it would have generated a nice and profitable trade. Yeah, it was either here we talked about it or here, I can't remember, but it generated definitely a nice and profitable trade higher, and you would have stopped out had you used that already. Yeah, because then you would have exited upon a bearish cross of the moving average and averages, and you would now be waiting for another bullish cross. So yeah, not much more to add. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.